Good afternoon, traders. Joe Baker with Trade Pilot. What am I seeing in the marketplace? Well, we've gone essentially sideways, okay, for about the last 6 or 7 weeks now, staying within that range. Like I had said, between the about the 813, 817 area and about the 819 area, 818. Okay, and we've tried to make some highs, do nothing but pull right back down. Try to go down, make some lows. We pull right back up. So just some consolidation. It does make it easier to trade on an intraday basis as long as you know what to look for. But the numbers are being repeatedly hit and then bounced off of. Take the 53s. We bounce off the 53s. We get up to the 63, 64 area. Okay, a little pause, as they call a little bust up there at the 58s. Then above that area, we just usually run up to the 67s to 69s. That's a kind of a little congestion area there, a little high volume area. And then obviously up to the 74s. And then above 74s, we can get up to 80, I believe 80 and a half. And then 84. Okay, now those of you that get my levels, they're all there, and we'll continue to just keep trading around those numbers. These are the numbers that we've been trading around for the last 4 or 5 days. We probably will till the end of the year, though nobody knows what the market's likely to do. But nobody obviously wants to take big positions before the new year and carry it over into the book. So obviously after the new year, the volatility will increase. Just to give you an idea, on a 5-day average true range, just 30 days ago, it was over 60. That means we were averaging over 60 points a day in the S&P. Right now, we're at 14. Okay, down to 14. To be honest with you, that's about the average. Okay, the average does run about 14 to 17 points. And again, being where we are as far as the level goes, more so around 12 would be, 12 to 14 would be more of the norm, okay, of what we can expect for volatility going forward. So if this market's going to continue, it's very important that you know the key areas, know the key levels, okay, so you don't get caught and, getting into a trade, because what's going to happen is you got to get into the trade you got to pick your entries a little bit better, because the trade's not going to go as far. So, a lot of you, were able to say, Jesus looks like it's going down, and we'd be getting 18 and 22 point moves, intraday on a setup. Now they're only paying you, 5 to 7. So obviously entries are a lot more key. Okay, so again, as you know, my levels, all you have to do is sign up over at the blog on the left-hand side of the page. Okay, just go in, put your email in, and they go out every night. I do them for the NASDAQ, the Dow, and the S&P. So what do we have in the marketplace? Okay, as you're probably staring at this picture saying, when are you going to talk about this bear flag? I was hesitant to call it a bear flag only because I know it's consolidation and I know it's end of year. Okay, so patterns like this can take place, but to ignore it would be, a little foolish, because if it does break down, it will obviously be a sell signal. So this is what you have to be careful. It's a very, very narrow range. Obviously, like I've told you, that the range is narrowed so much. But look, as you see the money flow, okay, as this market has tended to come upward, okay, the money flow has dropped. Okay, now that's expected, because obviously look at the anemic volume we're having. Okay, so I'm saying we have a nuance of end of year, so I'm trying to put basic technical analysis into play, but we all know that the volume has been pathetic and anemic. It's been 30% of, okay, which is a good reason why the momentum, okay, has dropped at the same time. So if this wasn't, okay, the end of the year. All right, I would say this would be setting up a, a very bearish bear flag. Okay, so what has to happen for this to work? Okay, just because we're going to get to the end of the year sooner or later, and if this does play out, I want you guys to be prepared. Okay, about the 850, okay, has to be taken out. 850 comes down, takes out the 850. Once this breaks and closes below, and then comes down to the 850 area and takes that out, we have next area 826. Okay, that's scenario 1. Scenario 2 would be to take out the 892 area, okay, to the upside. And then, above 892, we have the 918 that I mentioned in my last video, which is the 918 level here, okay, that has held, guys, since, if this thing will go on, since November 12th, okay? So, since basically the first week of November. Now we're in the first week of January. So that area has held. So if this market is strong enough to take it out to the upside, then this whole bear thing is, negated, and you don't have to worry about it. And we'll go towards the 1007. Okay. And if not, then we come down. Now, one thing I want to mention, I know most of you probably have heard of the Stock Traders Almanac, but one of the setups they talk about is the low in January should not take out the low in December. And if you noticed, we did that in 08. Okay, so 08's January took out December's 07. That should never happen, and if it does, it sets up for a very ugly year. So I'll keep you posted on that one, and I'll explain a little more about that and why. But again, as you guys know, we do run an intraday trading room, and we talk about setups all day long and levels, certain areas of support and resistance, market symmetry. And again, you are all welcome to come in for a free trial. Stop by. We'd love to have you. Just shoot me an email, and I'll get you over a passcode right away and get you in the same day. Okay, guys. So that being said, again, sideways trend, anemic volume. Don't play too much into, one rally or the other. I think that any sell-off has been, propped up because these levels, again, are just levels everybody's trading off of. So if one area is, resistance, it can come support. So remember that markets tend to what they call reverse the polarity of certain numbers. So just remember what is support will be resistance, what is resistance will be support, within your intraday trading range, because we could be stuck in a range for an awful long time. Okay, I mean, this can go on for months, guys. Okay, it did all summer long. We went for 3 months all summer, so 3 or 4 months actually in a range before we started to break down. We could go for another 3 or 4 months before we break down or break up. So, all right, that being said, everybody have a safe and happy new year. Again, any questions too? If you have any questions or any comments, please just shoot them over and I'll answer them as soon as I can. Thank you guys, and take care.